Everybody talks about this one simple idea. I see literally every single trader on YouTube talking about the same thing, about selling your losses, about cutting your losses, how to cut your losses. And it's one of the things I think a lot of people have a big problem with. Really, as a new trader, a lot of people have an issue with cutting their losses. It's like so simple, the idea that if a stock's dropping and you're in that stock and it's going below where you bought it at and it doesn't look good, cut your loss. Well, I have a problem doing it sometimes. I mean, not really. I usually always cut my losses, but sometimes it bites me in the ass later on. But overall, cutting your loss is one of those things that you need to follow. Cut your losses. Do not think, oh, well, maybe I'll maybe I'll let this one crash and maybe it'll come back up. Maybe I'll give it time. Let us see what happens later. Don't do it. Do not do it. I had a chance to cut them. I didn't follow the rules. I let them go down more. And then before I know it, it was at the bottom. And I'm like, oh, I could have cut my loss much higher, taken the loss and moved on to the next one. I think a lot of people get so focused on one stock that day. One stock's going up big. They see that stock, maybe they traded it one time and they're focused on trying to get in on it again. They're over trading and they're just forcing trades. I'm no saint by any means. I do it. It happens. I understand that. I do it. Like I said, I'm not a saint when it comes to over trading and cutting my losses, but it's one of the things that I always try to enforce to cut my losses. I'm going to talk about GLYC yesterday. This is a clear example of why cutting your losses is so important. And there's other reasons too, other rules that you might have broken by chasing GLYC yesterday or blah, blah, blah. But in general, cutting your loss is the key here to protecting your profits. If you cut all your losses fast, that idea that you're only losing $100, $200 per trade, but then you're making $100, $300, $400 per trade, it kind of leverages itself out in the long run. The idea is that we're kind of like 70 to 60% winners. Then we have like 40% losers. You get an idea that, 7 out of 10 trades are winners and 3 trades are losers. I'm just keeping those losses small, and that's going to help my profit in the long run because it's really, no one's going to ever be 100% right. You can never guess exactly when a stock's going to crash or when it's going to go up and all that fun stuff. But in general, the big thing is about cutting your losses. Somebody the other day in the chat room was like, I've been averaging down. Averaging down has been working great for me. I'm a very firm believer that averaging down in most cases is a terrible idea. Why do I say that? I just don't think it's a good idea. Looking at GLYC here on the 5-minute chart, you can see from 11.26 at open, ran up to 14.64 and then pulled back, and it pulled back hard. It pulled back all the way almost to where it opened at, down to 11.62. So almost up and then straight down to exactly where it opened. $3 loss there. The guy who bought this at $14 or above, he's sitting there like, well, it's going up. It's going up. It's going to go to $15, $17. I'm going to let this one ride. And then all of a sudden it starts crashing. Now it's, below $14. And I'm like, well, there's support at that 13.65 area maybe on this last candle. I'll kind of keep that as my stop area. And then all of a sudden you get this candle here that drops down to 12.81. And I mean, it happens so fast. You can look at the 1-minute chart. It just went straight down basically. Gets up there to that 14.60 area and it just goes straight down. There's really no time. Had a couple little bounces, people covering short, stuff like that. But overall, it got hammered and crash down. So if you were foolish enough to hold through this and it crashed down to that 11.60 area, I mean, you lost a lot there. So cutting your losses is key here. Averaging down, there's a time to average down when you see a stock has support. Like if we bought this at $14 and then it comes down to 13.60 and it starts to bounce, it has good support there, it's holding that area, then starts to go higher. Maybe you average down then, but even then, I think it's a bad idea to average down. Maybe you feel differently. If you think differently, leave a comment below. It's always good to see people's discussion about these things. If you think that averaging down is a good idea or a bad idea, do you average down? I mean, what do you think about averaging down in general? This is how I feel. I feel that averaging down in the long run is going to kill you because if you average down on this stock, let's say you bought it at $14 and then you buy another 1,000 shares at $13, another 1,000 shares at $12, and then it's down at $11. I mean, you're in the hole huge. You just made that loss that could have only been, a couple $100 that you could have cut your loss there at 13.60 or whatever. Cut your loss there and been done, moved on. Now you average down, you got 4,000 or 5,000 shares and you're down to $11 and you're down $5,000. So bad idea to average down on a stock like this. So definitely, GLYC, terrible idea to average down there. Yeah, I mean, GLC kind of bounced back. It got back up to that 13.35 area, but it's a total gamble. It's a gamble entirely here because you have no idea if this was going to bounce. I really thought this was going to just keep on going lower it had that support there from open at 1160 that kind of held. You had people still buying it, hoping this would go higher after that big move, kind of like a dead cat bounce there. Once it bounced, it went up again, but still just not super clean, and not sure if it, not sure what was going on there, but playing it safe. Cut your losses. Just do it. Just cut your losses. Don't be that guy that sits here and goes, hey, I bought GOYC at $14. What should I do? Now it's at $12. Do you think I should sell it? You should have sold it a long time ago. I get that question a lot. People on stock twits or Twitter and stuff. Hey, I bought this stock. It's crashing. What should I do? If a stock is crashing, you should be selling it long before it's crashed down $2 or $3. Cut the losses when you have them. Just cut it. Take your profit when you have it. Cut your losses and just stick to that rule. The big thing is if you start emotionally thinking about it, like, okay, well, what if I cut my loss here at 1360 and then it bounces and goes back to 1450? It's possible. It might happen. It might bounce back. But the problem is if you sit here and you think about it too long, or if you don't cut your losses fast enough, landslide. It's a landslide of emotions. Your emotions are going to get to you even more. You might do something stupid like averaging down there at $12 or then getting down to 11 and just being deeper and deeper in the hole. So don't do it. Don't try to force these trades. Don't sit here and think, oh, I can average down, or oh, I'm going to let this one, drop a little bit. It's up 100%, so it's got to keep going, right? At 100%, why wouldn't it go 200%? If it's at $14, why wouldn't it go to $17? It's not how it works, guys. These stocks that run up big, they crash down fast. So play it safe. Cut your losses when you can. Play it smart. Go into every single trade knowing your maximum loss, going into it knowing where you're going to cut your loss at. No matter what happens, I'm going to cut my loss if it gets to that point, and I'm going to move on. I'm not going to sit here and go, well, okay, here, I cut my loss at 1360 there. Well, now it's bouncing back up. Now it's up at 1378. So maybe I'll buy it back. Maybe I'll buy back in again. Maybe it's going to go back up. No, just give it a chance. The best play here would have been, if it bounced, if it hit that $14 area and then crashed to 1360, I obviously would have sold faster than 1360, but if I would have sold, 1390, 1380 area and it starts to bounce back, I give it some time. I keep an eye on it. I want to look to see if volume is increasing, on that move higher, and then maybe buying it back again once it gets above that 1439 area, looking at the candles there, seeing where that previous kind of high was. High of day was 1464, so obviously if it gets back up above 1464 and wants to move higher from there, that's a good sign that it's returning, getting bullish again. But overall, when it starts just going lower and lower and lower, it's nothing but bearish at that time. And don't try to force these. Don't be the guy trying to catch these falling knives. I see people doing it all the time and say, hey, GLYC is crashing, this is a good time to buy. Dip buy, dip buy. Well, a dip buy is only a dip buy until you're basically buying it and it's crashing more. So be careful. Cut your losses and take your profit. The number one rule, I'm just going to say this over, and this might be my new tagline: bulls and bears make money in the market, but pigs get slaughtered.